Good morning, good afternoon, good evening, wherever you are, whatever time of day it is. Welcome to today's Friday Fix. It is March the 21st, and obviously it's a Friday. And as usual, myself and the awesome AlphaPicks team, which is Jay and Alex, will be providing basically just chatting about the major stories and themes of the week. Obviously, Jay's on the call, but before we're waiting for Big Al. Yeah, I better get the legal.
Big Al.
Big Al.
Good
I
afternoon,
could
Ryan.
say something else there, but I won't. But yeah, whilst we're waiting for him, I'll get the legals out of the way. So as usual, nothing discussed on this space session constitute trading or investment advice, or infers any kind of endorsement by PiQ Global Limited, Trade PiQ or PiQ Suite, or indeed that of AlphaPicks, and of course the host, which as you know by now is myself, Ryan Paisley, Jay, and Big Al when he turns up. But how are you, Jay? All good?
I'm very good. I was enjoying some nice English weather finally yesterday.
Oh, mate,
It's gone
beautiful.
today, but
It's beautiful,
it's a lovely day.
Which is why Mr. Michael Brown's been working from home the last couple of days. You know, he's out in the garden.
Yeah, with a beer, for sure.
Handkerchief on his head, like knotted handkerchief. Oh, here he is. Here's Big Al. One sec. Let's add him to a co-host. Bum bum bum. Oh, we need to also at some point we need to discuss your very very good primer on Stirs.
Oh yes, the wonderful world of stir markets.
Al, you there?
Yeah, I'm here.
Oh, it sounds like you're in a car. Are you in a car?
No. But talking about cars, I got
God.
a parking ticket this morning,
Oh,
and
no.
it's one of those super annoying ones, which anyone living in central London can relate to. Is that there's always parking suspensions, those yellow signs over the normal ones, but they're so, they're on the parking suspension, you'd be like, oh, from numbers 10 to 20, parking suspended. And it's like I was parked nowhere near the boundary of it, and yeah, they gave me a ticket. And
So
also,
so today's Friday Fix is basically going to be Al moaning about parking and congestion charges.
and also
The
the
most,
other one,
the
which is
most first world
crazy.
problem I've ever heard.
Yeah, and the other one is that the council can move your car. So I'm not talking about like sending it to the compound, but they can just move it. So there's a blue sign. I'll send a picture of it, and it basically says your vehicle has been repositioned by the council, and they moved my car one street away. I'm like, yeah.
Is it like, don't worry, like Al, this is a safe space. Let it all out.
It's just what I needed on a Friday morning. But anyway, how are both of you? It's been a big week.
Very well. It's been a very busy week. It's been a lovely weather week as well. But yeah, all very good. There's lots to talk about. So, go on. What are you going to talk about this week?
Yeah. Well, we're locked and loaded on news because I did the Bloomberg quiz this morning and beat 88.5% of participants. So I know what's been going on in the markets this week. Yeah, humble brag. So we'll start off. Actually, I think we'll start off with Wednesday. Actually, let's do the Fed first.
Yes.
So the Fed basically came out and Powell said that actually things aren't that bad. The impact on tariffs on inflation should be transitory. Brought back his transitory word, which he loved, right? And it was kind of like, he didn't really say anything that particularly moved the needle. But the snippet I took from it that was most interesting was on the new dot plots. Obviously, people were like, yes, fantastic. We've still got 2 cuts priced in for this year, which is why we saw that slight pop in the equity market straight away. But the median forecast of 2 cuts, which takes it to 3.75 to a 4% banding. In December, there was 4 members that had projections higher than that banding, whereas now there was actually 8 members that had projections higher than the 3.75 to 4% one. And in my mind, and I think that's why we've seen some different price action since Wednesday night, actually is an indication that really the risk is skewed towards the Fed not cutting as much as 2 this year versus becoming much more accommodative. That was my sort of message that I took from the Fed meeting.
No, yeah, no, that makes perfect sense. In actual fact, I think Michael Brown mentioned something similar. Well, it would have been Thursday, but and also I think, well, as me and Michael said the other day, it was, I think like you said, like picking up on the use of transitory. Like, there's not one word in that statement or in the presser that isn't really thought through. So I think it's quite telling that they're bringing that out. And like, well, to be honest, I haven't looked at the pricing, but did the back end of the curve move much, kind of based on like the based on the Fed and the statement and the presser? I'll be honest, I haven't looked.
Well, I'm looking at it right now. So in terms of OAS pricing through till the end of the year, it has, what does it have? It has 2.8 cuts priced in. So yeah, 70 basis points. Which I think from that perspective, that I'm not saying that's peak, but I think if anything, given where the dot plots are, I would say that 3% is I'm sorry, 3%, 3 cuts is your floor, and if
Yeah.
anything, that has scope to move back to 2 or even higher.
So
So
you said,
that's me.
so what was it? 70 basis points priced in, did you say?
Yeah, 70 basis points priced
Well,
in.
here you go then. So here's the first question for us. So you're a buyer or a seller of 70 basis points by year end?
Jay, you want to hit on that first?
By year end, I'll change it slightly. I'd probably be a seller now and then look to buy.
Oh God.
Oh,
I don't know,
he's
Oh,
man.
leaving
job in and
orders.
job out.
He's putting
There's
limit
there's a
orders
lot
in.
there's a lot between here and year end.
Yeah, of
to make
course.
that call.
Yeah.
That's why it's a difficult question. You should be a politician. I'll be honest. I'm a seller of 70 basis points.
Yeah.
Well,
Yeah.
what are you saying?
Wait, so Jay, what are you saying? You're saying
Yeah,
you're
that's
I'll
fine.
basically
say
a buyer.
okay. I'll go
So you're a
seller.
seller.
Leave it
Okay, I mean, I'll
definite.
take. Yeah, I'd take it. I'd take it. I'd take sell at 70.
We're all buying the back end then.
Yeah, I just struggle to see it. And when you've got, and the other thing that I think adds into the mix, which actually is a slightly separate point, is obviously Powell spoke about he publicly cited tariffs as giving this high degree of uncertainty going forward.
Oh,
And
uncertainty.
so
That's the word.
yeah, and I feel like it's one of those where when you have that uncertainty, and this isn't just with the Fed, this is with other central banks
Yeah,
since time has begun, is that when they have uncertainty from tariffs or from any other sort of macro driver, the tendency is for them to sit on their hands. Like central
yes,
bankers don't want to stick their head above the parapet and either cut or hike or amend monetary policy
yeah.
and try and preempt the uncertainty. So from my perspective, if you do see continued uncertainty with Trump and tariffs, then are the Fed really going to cut 3 times this year? I struggle to see it.
The thing is as well, I think, yeah, there's been a lot of bad news already. Well, I said bad news, bad vibes. It's all about the vibe. But already in the market, such as tariffs and the uncertainty, there's a shit ton of uncertainty risk kind of in the market, in the price now, which obviously why we come off. The tariff. Trump couldn't be more vocal about tariffs. So it's almost like, are we front loading bad news or bad vibes, which means potentially, like, as the year progresses, when that kind of hopefully the waters calm a little bit, and we get more color, more certainty on what Trump's looking to do. Perhaps we've in 2 months' time, it could be in 2 months' time, potentially there could be ceasefire, Russia, Ukraine. We could have far more color on how uh, third party countries other than the US are kind of responding to Trump's tariffs. Are they bending the knee, or are they going? It does feel like we may be like peak uncertainty, if that makes any sense. Obviously, and if that is the case, and we get less uncertain, I'm not going to say we get more certain, but if we get less uncertain, that obviously should be. I'm adding every caveat I can imagine in here. That could be potentially the markets.
It's true. I mean, the only thing I'd counter that with is that there is certainly, from like switching to a corporate perspective, the flow of uncertainty takes time to be manifested. And I
Yeah,
think what's been really interesting with a lot of the corporate earnings this week, that I've looked at, for example, like Nike, FedEx yesterday, even Nvidia on their Quantum Day and their sort of their annual conference, all of them flagged up tariffs as being an uncertain driver of financials for this financial year. Nike was the big one in terms of they downgraded their 4-year outlook based on partially that tariff
Yeah.
uncertainty. FedEx were similar, and you can argue that actually, are they just using, these corporates love to use, macroeconomic uncertainty has caused us to revise our things lower, when actually they're just struggling anyway.
Yeah,
But
yeah, right.
the caveat I'd say is that for these companies to be cutting their full year outlook based on tariff uncertainty makes me think that actually, it's going to be something that will take some time to
Yeah.
filter through at a corporate level, and therefore it's not something that can just be solved in a matter of a couple of weeks from Trump.
Also, if anyone is playing the uncertainty drinking game, where every time we say uncertainty, you have a shot, you're going to be absolutely hammered already. We're ready to go
I
in a
think
few
they
minutes.
are. They're on the
But,
floor.
but on the but on that, it was this time last year. Well, end of 2024 when we had that earnings season. Like everyone was going through the statements and stuff from the corporations, and word counting how many times AI was mentioned. It does feel like now we're kind of doing that, but with the uncertainty and again tariffs. And again, it's an interesting one. Obviously I'm permanently bullish, just on life in general. But I do feel like I'm struggling to think of scenarios where Trump gets more volatile or gets more uncertain. I don't know. It's an interesting one, but again, it will be the theme that shapes the rest of the year, right?
I mean, he'll struggle to be more active. I think that's definitely a
Yeah.
phrase we could use. Like, I mean, he can't keep up his activity. I mean, even obviously with the Fed, which finishing off on, he came out and tweeted that they should be lowering rates now in anticipation for tariffs coming in at the end of this month.
Yeah.
And I think he'll struggle to be more active than he is at the moment, wading in on all these issues. But
Yeah.
we'll have to see. Um,
Just on
so
that point
yeah.
with Trump and the Fed, because I thought we did have a slightly more hawkish SEP, but Powell's comments were slightly more dovish, which he is in nature. But I did think maybe part of that is just to ease the pressure, which might come
Yes.
from Trump and Besant, who want rates lower. If he came out hawkish, I think he would have been facing a difficult few weeks talking
Yeah.
with those guys. So that was my takeaway from the dovish comments from him. Might have just helped ease the Fed.
Yeah, well, exactly that. Like, like you said, just try and say anything to keep Trump off his back.
And Jay, you made a good point at the start of the week, which you wrote about on Wednesday, about how the Trump put, which clearly isn't being evident in equity markets, is actually potentially more in the rate space. I think you made a good point on that. If you wanted to bring it out a bit more.
I'm just getting the article up here to remind myself of the thoughts.
It was only
Well,
Wednesday.
I mean,
It's been a long week, flipping.
yeah, it's been a long week. Yeah, I mean, because you had a conversation with Steve Ho earlier in the
Yeah,
week.
we had a great,
Oh yeah.
great interview that ultimately couldn't publish because of compliance, which is, anyway, such is
Oh
life.
really? Nice.
Yeah, but we were talking, well, not at length, but partly about Trump and how it's not been evident in the equity space, but you can make the argument that actually Trump has been more focused on getting yields lower. And if you look at like the 2-year, the 10-year, from January when he was inaugurated to now, they have, almost across the curve. In fact, I think all the way across the curve has come lower since Trump has been in. And actually, that as a Trump put, if you like, in the rate space
Right.
is more evident, partly because of the debt funding or whatever, or Trump wants to try and help with mortgage rates, or whatever his agenda is on that. Or you could argue just because the stock market has tanked, he's had to basically bail out and go for the
Yeah.
go for the treasury space instead. But I think it's quite a plausible argument that you could see yields continue to come lower, based on Trump being more aggressive in that regard and
Right.
actually leaving stocks alone, which, if anything, could spell further bad news if he's happy to let that keep falling.
I think I do think towards the end of the year you might see slightly more of a neutral stance from Trump, where he does kind of help the stock market, starts commenting on it more so. But I think for the rest of H1, his focus, Besant's focus, is to get the 10-year down, which they've spoken about a lot. But I think maybe towards H2, depending on how much, not to say the word again, but uncertainty carries on in the equity space.
Drink.
Have a
Someone's
drink.
drinking a lot. I wonder if he will pivot back once he's kind of happy with where yields are, and then pivot back towards stock market. Like, he's not going to spend his 4-year term not caring about
No,
the
exactly.
equity market. So at some point, he's
This
going to
is
have
it.
to.
I know
he'll
we
come
spoke.
back into
Well,
it.
it wasn't last week, was it? It was the week before. I know we mentioned it already, but I still can't get my head around that comment. It was like, oh, I don't look at the stock market. I was like, mate, your first term every day. I didn't need to check Reuters or Bloomberg for the Dow price. You could just check Trump's Twitter feed.
It's true. So Fed, Trump, I think we've covered off all of those. A few other little tidbits, interesting stories from this week. Ryan, I kick it across to you actually, because I think you retweeted chart from Michael about copper on the LME
Well,
above
this is
10,000 a ton.
to be fair, I mentioned it yesterday, and it has been an ongoing theme literally since January the 6th, basically. And it's not to do with the role, no matter what people say, but it's that if anyone looks at, obviously Michael Brown posted the chart, I posted the chart, Michael Brown posted the chart. Obviously the LME copper price versus New York copper price. You go back 5, 10, 20 years, they pretty much move tick for tick. And it's it has gone on the radar there. I know the FT done a story on it, and it's getting more like now. But that, air quotes, ARB, is completely blown out, and it's all down to down to the tariffs. I think it's a really interesting kind of market to look at, because that disconnect between LME price. So for those not aware, so the New York price is blown out compared to the LME price. So the New York price is blown out compared to the LME price, and it's because New York settled or delivered copper has the premium because it's factoring in the tariffs, and people want to be certain that whatever they're buying, or whatever copper they're buying, is going to be delivered tariff free or and have that priced in. And I think it's one that kind of, when we get disconnects in that, like we saw in nickel before, I think when we get, especially the things like the physically settled products, when we have this dislocations, I think that tends to kind of trigger, or it puts a lot of people on edge. There's a lot of margin involved, and I think it makes the frailty in that market will kind of expand to other markets, and kind of just by the network effect. Also, just one thing is similar kind of vein, but one thing that hasn't, in my opinion, hasn't been getting anywhere near enough attention is the shipping port fees that are going to be coming in, or planned to be coming in by the Trump administration. And like, these are fairly chunky port fees that people really aren't picking up on. The grain trade, physical grain traders are really now obviously seeing that they can't book in shipping to export their grain anymore because of these things. So just for anyone that doesn't know, basically, if a fleet has, so like a shipping fleet has X% of their fleet of ships made in China, the whole fleet will get charged extra when they come into port, and it can be up to $1 million for the boat when it comes into dock in a US port. Now, the crucial thing is, it doesn't matter where the ship that's docking was made. It's all to do with the company that owns that boat, where the percentage of their fleet is made. And so I was talking to Angie, who I do the grain market blast with, and she was saying that potentially it could add like 50 cents per bushel on grain exports. And these are shockingly big numbers. And I think it's, unless something's sorted out, it could be very, very damaging for US exports, because no one's going to be, one, no one can afford the shipping fees, and two, like, no one's, the grain traders got the problem at the moment where they literally can't book shipping because the ship owners, the fleet owners are like, well, we're not going to send you a tender because we have no idea what we're going to be charging.
It's an interesting one for sure. I haven't. That was the first I'd heard of the grain story, which is definitely one to keep following. I mean, on the copper, I do. Yeah, I agree with you as well. And from my perspective, and tell me if I'm wrong on this, my assumption would be is that the arbitrage technically doesn't exist at the moment because, in theory, let's say there's a 20%, 25% in point levy brought in on copper, then in theory if there is a 20% discrepancy in the prices between New York and London, actually maybe there isn't any arbitrage there because that is where it should sit at.
Well, yeah, so almost like it's going to be 20% more. So if it trades up to 25% more, it's a sell, and if it comes off to 15% more, it's a buy.
Yeah, I mean, in theory, yeah. I mean, we're getting very speculative now, aren't we?
Really basics here, but if it should be 20% more expensive and it's not 20% more expensive, then there's a trade in theory. Not trading advice, not trading advice.
Yeah, I mean that's pretty roving. Yeah, I mean, yeah, that was the initial thoughts I had anyway. And another story which I don't think has got much attention, which I actually wrote about this morning, is the situation that's been going on in Turkey this week.
Oh yes.
So obviously I'm going to do my
terrible. I didn't mean to sound so excited about.
Yeah,
that.
I mean it's fine. I mean, yeah, like political turmoil. Yeah, so the Istanbul mayor, who I'm going to say his name is Imamoglu, which may be right or wrong.
I'm going to applaud the attempt because I can't myself to attempt it.
His first name is Ekrem, so I'm going to call him Ekrem.
There you go.
Yeah, Ekrem. So he basically this weekend was set to become the presidential candidate for the Republican People's Party, aka the main rival for President Erdogan at the minute.
Yeah.
And so Erdogan, you may have different opinions on him. Is he a dictator? Is he, where do you sit on the spectrum? Yeah, leave that for everyone to decide.
Yeah.
But
we are very politically neutral on the show.
We are politically neutral. Anyway, but he basically, Turkish police detained Ekrem earlier in the week on the classic charges of everything from financial corruption, terrorism, or anything under the sun. And this sparked a big reaction. So obviously, the lira flew 11.5% higher on Wednesday on this news, which is a big move when you consider that Turkish lenders stepped in, and from the data I saw, they sold about 8 billion just on Wednesday morning. So if they hadn't been active in the market, the lira weakness would have been substantially more. The local equity market triggered lower, 7% on open on Wednesday. Overnight funding obviously blew through the ceiling in terms of stopping out a lot of people when they carry trades. And it's one where ultimately, and I fortunately have always stayed away from dollar Turkish over the years, because yes, you can see the attractiveness on the carry, because it's so pronounced, but at the same time, it boggles me that, and I've heard on the street that there have been some funds that have been really hit on this week, but it's why? Yeah, to me, it's you always know Turkey's a hot potato. Yeah, and it's you might get away with it for 3 months, 6 months, whatever, but situations like this show that it's pretty much always going to blow up in your face.
It's very much, it's the typical kind of pennies in front of a steamroller. Yes,
exactly.
Harry's great and stuff, but that something like what's happened this week could happen, and then literally, all your gains for the past 3 years on those small little arbs you're doing, or those small little carry trades, it's completely wiped out, and then then you've got a tap on the shoulder. See you later.
Yeah, exactly. Yeah. So I feel like it's. And you can argue that really this move in the lira, yes, you can run through the implications of it, but detaining one of your opposition, if he lets it go, what I mean, it's not like he's declared war on a country, or it's not like he's gone under martial rule. It's kind of, yes, it's an issue, but I think the sensitivity of Turkey's assets, the currency, stocks, funding, etc., really just goes to show that it really doesn't take much too much from a political standpoint
Yeah.
to significantly influence
But it's
the
kind of,
financial markets.
like Michael Brown is always very fond of saying, in terms of China, like equities, everyone says, oh, like now's the time to buy, but you never really own Chinese stocks because technically the government, the government could take them off your hands at any moment. It's that kind of uncertainty, and like it's even more pronounced for Turkey, and also because politically neutral, but it is a dictatorship, and Erdogan sometimes just doesn't seem to care what the repercussions of any of his actions are. So why, like you were kind of insinuating, it's like, why would you touch that market? I wouldn't touch it with Jay's money.
Cheers. Appreciate that.
Yeah. The only interesting one, which I hadn't seen quite as realized this, was Turkey have got their inflation down. So a year ago, well, actually, let's throw this open as a final hurrah on the Friday fix for today. Can you tell me what Turkish inflation was running at a year ago versus what it is now? And now there's a disclaimer: it was high back then, it's still high now, but it has come lower.
Oh God. Jay, you can go first.
Let's go 10, 15%. I've no reference for me.
Right,
So
I was going to say 40 and 30. 40 there,
Okay.
30 now.
40 then 30 now.
Yeah. So it was 75% this time last year, and it's now down to 39%.
Oh, so well, on that now, I'm not going to take any win from that.
yeah. It's a wide of the mark on everything. Yeah. Wonderful. But yeah, so I think in light of time, I think that's basically all of the stories I wanted to run through this week. Unless anyone else has anything to shout about.
Just final point for me is you've obviously got lots of options expiring today.
Yes.
I did put on the AP account an interesting snapshot from something from Goldman that came across my desk this morning. So that is pinned at the top. $4.7 trillion in notional. It's just an interesting bit of data snap there. But yeah, that's
where did you put that? Oh,
everything
it's your top tweet. Let me give that a repost. There you go. And the thing is, as well, like not only have you got this, but there is a lot of headline risk over the weekend, right? I think US envoy and the Russians are meeting up in Jeddah in Saudi Arabia on Sunday, I believe. So why, if you don't have to hold positions over the weekend, why would you?
Yeah,
wise words.
Good note.
Wise words to finish on.
It's like like the old oil trading adage, like no one is short oil over weekends because you just don't know what's happening, and it kind of feels like the same with equities at the moment. Why have any position in equities at the moment? Because over the weekend, should I say? Because we have no idea what's going to happen. There's headline, there's gapping risk everywhere. On that cheery note, God.
I'm going to pay my parking ticket.
I'm just gonna log into IG and get out. Oh, Pepperstone. Sorry, I'm gonna log into Pepperstone and I flatten off my book.
Wonderful. Fine. All good, guys. Pleasure as always. And
absolute pleasure. Thank you so much,
the weekend.
guys, for getting on. I think do you know what? I think we need to do more regular kind of like shorter ones during the week as well. Say building. Well, still doing the Friday fix, but I would love to do more kind of just short ones. Especially in actual fact, I think there's a market for like very kind of brief summary kind of chats where you guys can chat to me and explain to me all the articles you put out. So you put out an article, we jump on and you can explain the article, save me having to kind of get me dictionary out.
Read them.
Having to read.
I was going to say long words. I'm all right on the shorter words, but the longer words, they throw me.
I'll write simplified versions for you, Brian, and send them over.
Please, mate. If you were like with crayons, if available. Guys,
cool.
Awesome as always. Thank you so much. Keep doing the amazing work you're doing. Like the articles you put out, genuinely, jokes aside, I think they are absolutely awesome. It's like that Stirs primer I thought was really, really good. Anyone that hasn't checked it out, definitely check it out. It's AlphaPicks' pinned tweet. Give it a read. Even I can understand it. So it's available for all levels.
That's something.
Yeah, exactly
Mm.
right. But guys, again, honestly, thank you so much. Keep being awesome, and we'll speak next week.
Yeah, perfect. Thanks
next
ever so
week.
much, guys. Enjoy.
Take care, guys.
Ciao.